Welcome back. It's time for today's edition of Tech Check, and we got to talk some Netflix. Over the past 6 months, the stock is up a nice 60%. The shares have more than doubled off their 52-week low, and now they're only about 10% off their recent highs. And with the next earnings report due out a week from today, analysts are debating how the company's crackdown on paid sharing is going. Let's get to Julia Borston for those details. Julia?
Well, Kelly, this is the topic of debate. There are 4 analyst notes out today weighing in on the implications of Netflix's all-important crackdown on password sharing, whether it'll drive revenue growth or cause subscriber churn. Morgan Stanley, Barclays, and Baird analysts issuing notes maintaining their hold ratings. J.P. Morgan defending its overweight rating and raising its forecast for first quarter subscriber additions in its note out today. Now, Barclays notes that the rollout of paid sharing has been slower than the company originally guided, saying, quote, paid sharing could be a meaningful new revenue driver. However, there doesn't seem to be much priced in for execution risk, saying we believe Netflix will need other growth drivers such as advertising and gaming to start contributing soon. Meanwhile, J.P. Morgan a little bit more bullish, writing, quote, we continue to view the paid sharing rollout in conjunction with advertising as a major part of the near-term bull thesis. Now, looking ahead to earnings, which are a week from today, this is the first quarter for which Netflix has not shared a subscriber forecast. So we'll have to see how much this quarter's results follow the typical trend of Netflix having a seasonally weak first quarter when it comes to subscribers. Last year's Q1 was the first time in years that Netflix had lost subs. Kelly?
But now, even when I read recent data from Bernstein's internet survey, Julia, they say that Netflix has re-accelerated momentum in terms of its downloads and streaming and that sort of thing. And that data seems to point to this renewed momentum they're having.
Yeah, it definitely seems like renewed momentum. It was interesting. I was just reviewing all of the quarterly subscriber numbers from last year, and it was the first half of last year that was really weak. The company lost over 1 million subscribers, but then in the second half of the year, things really accelerated. So the question is now what kind of growth they see in terms of the ad business, the fact that they do have this ad-supported option out there now, whether that helped them, and then also how many people who are subscribers are so drawn to the content that even if they're, say, borrowing a subscription, maybe they can get some of those people who are borrowing to start paying for their own subscription, or the people who are paying and lending out their subscription to pay for maybe a bigger, more expensive option.
Exactly. Julia, thank you so much. We appreciate it today. Julia Borston keeping her eye on Netflix.